Hi, this is 2021 ALL company account discussion. Uh, First, four adjustments is given related to the proper plant and equipment, right? Office equipment costing 1,200 was purchased on 30th June 2020 and it has been properly accounted. And this is the only purchase as to proper plant and equipment during the year. And the land and office equipment were revalued for the first time as in closing date. However, no accounting error. Accounting entries have been made for this. The depreciation for buildings and office equipment for the current year has been correctly calculated and accounted. The motor vehicles was sold on 1st of October 2020 for 4 million and this motor vehicle had been purchased on 1st of October 2018 before 2 years, 5,000 and this company depreciated plant and equipment at 20% on cost. The cash received by selling this motor vehicle has been debited to the cash account and credited to the motor vehicle account, right? No other account entry has been made, so the depreciation on motor vehicle calculated for the whole year based on the opening balance. So that's the error that they did, right? Okay, so first thing, office equipment costing 1,200 was purchased on 30th June 2020. The information given in the trial balance is given the closing balances. The closing balances of cost and the closing balances of accumulated depreciation. And they did the depreciation correctly, right? So office equipment in the trial balance is given 7,500. So from that 7,500, you have to minus 1,200 to get the opening office equipment balance. So your office equipment opening balance is 6,300. Right? And then you have to find out depreciation for the office equipment. Yes. Office equipment depreciation is given, right? In the trial balance and in the information. So depreciation is 750 and those are correct. And also buildings depreciation is also given, right? But you didn't want to record these depreciation in expenses again because they already did the depreciation and recorded that correctly. Here it says the land and office sorry, the depreciation for buildings and office equipment for the current year has been correctly calculated and accounted. It's already accounted under expenses. But the case is for the motor vehicle. But before that, we will do a revaluation for the land and office equipment. Sorry, for the land and office equipment. So land, you are evaluating for 15,000, right? So land opening value given 10,000 and the land you are evaluating for 15,000, so which means that there is a revaluation surplus 5,000, right? So there is a revaluation surplus 5,000 and at the end you are evaluating office equipment for the 5,000, right? So office equipment 5,000, so office equipment closing balance should be 5,000. And before you are evaluating office equipment, you have to transfer the depreciation of office equipment from accumulated depreciation to the cost account. Why we are doing that? You have to get the carrying amount of the office equipment, right? So office equipment cost is 7,500. From that, you have to minus 1,500 accumulated depreciation, right? So your office equipment's carrying amount at the revaluation date is 6,000. So 6,000 worth office equipment you are revaluating for 5,000. So which means there is a revaluation deficit 1,000. So land revaluation surplus you have to record under other comprehensive income in the income statement, and the office equipment revaluation deficit you have to record in other expenses as office equipment revaluation deficit. And let's go for the motor vehicle. So here you are disposing 5,000 worth motor vehicle. But motor vehicle given balance in the trial balance is 20,000. So this 20,000 is after crediting the sales proceeds 4,000. So the correct balance of the motor vehicle is 24,000, right? And accumulated depreciation given 6,500, but there is a depreciation error 4,800. Why? They calculated a motor vehicle depreciation based on opening balance, so which means 24,000. So 24,000 into 20%, the current year depreciation that they already recorded is 4,800. That's incorrect. Why? Because the 5,000 worth motor vehicle you are disposing on 1st of October, right? So you have to find out depreciation for that 5,000 only for 6 months, first 6 months. Okay. So accumulated depreciation at opening, the correct value should be 1,700. And the motor vehicle, you have to find out the correct depreciation. So 19,000 into 20%. The motor vehicle that belongs to you from the 1st of April to 31st March, 19,000 into 20%, 3,800. And the motor vehicle that you disposed within the middle of the year, 5,000, you have to find out depreciation only for first 6 months. So that 500, the correct depreciation is 4,300, right? But in the distribution expenses, you already recorded 4,800. So the 500 you should deduct from the distribution expenses, right? And you are disposing this motor vehicle 5,000 on 1st of October 2020, which you purchased before 2 years. So when you are disposing, you have to dispose the cost as well as you have to dispose the accumulated depreciation as well. So for accumulated depreciation for this 5,000 motor vehicle is 5,000 into 20% into 2 years, 2,000. So motor vehicle disposal account, you are transferring the cost of the motor vehicle disposed 5,000 and you are transferring the accumulated depreciation value of the disposed motor vehicle 2,000 and you are disposing this for 4,000. So which means you are getting a motor vehicle disposal profit 1,000. So this amount you have to mention in other income. So that's it for the proper plant and equipment. This is a bit hard, bit difference rather comparing to the last years, right? Yes. So these are my two books that I already published, Company Accounts and the Cash Flow Statement. So each book have 25 activities and all the explanation videos is on my YouTube channel. So if you want to purchase, just send me a message through WhatsApp. The composition of administrative expenses and distribution cost is given below. This is the where that depreciations given here, right? And the interim dividend paid through ordinary shareholders is shown as other distribution cost. That's totally incorrect. The interim dividend payment you have to mention in changes in equity, and you have to deduct that from the retained earnings, not in that distribution expense. So you have to deduct the interim dividend payment from distribution expenses, and the correct way that recording interim dividend is changes in equity from the retained earnings, right? And it says audit fees, there is audit fee payable. Audit fees you have to mention in administrative admin expenses, and audit fee payables you have to record in other payables note. So for the note number 2, profit before tax, you have to mention the director fees, audit fees, and you can mention the depreciations, advertising under profit before tax note. Fourth one, the company entered into a lease agreement on 31st March 2021 as at closing date. As this is a bit same for 2020 as well, right? To obtain the right of use of the plant for a period of 5 years, according to the lease agreement, 2,500 was paid as down payment. 5 annual installments of 971 should paid over the lease term, and the first installment is due on the next year. The total interest payable over the lease term 1,355, which includes the interest for the next year 420. Only the down payment has been recognized as right of use of asset. Here you have to find out first the initial lease liability. How to find out? It says the annual installment is 971. So 971 into 5. The total installment, the total value of installment that you are paying, that you are going to pay, is 4,855. It includes interest, the total interest 1,355. Then you can find out the initial lease liability 3,500. So the down payment that you paid is 2,500 and the initial lease liability 3,500. So the cost of the plant is 6,000 and you are not doing depreciation for this year because you purchased this on 31st March 2021. So you have to do the depreciation starting from next year. So this amount you have to record in SFP non-current assets, right? And this lease liability 3,500 you have to split between current liabilities and non-current liabilities because the sum portion of this 3,500 you are settling in next year. So the installment 971 and the interest given in interest that you are going to pay in next year given 420. So the lease portion that you are settling in next year is 551. So in non-current liabilities, the total lease liability 3,500. From this 3,500, you are going to settle 551 in the next year, right? So your balance in the non-current liability, you have to mention 2,949, right? Next one, income tax paid includes 500 paid for the previous year and the tax paid for the first 3 quarters for the current year. The income tax payable for the last quarter estimated as 200. So tax paid for first 3 quarters, the tax paid mentioned in the trial balance is 1,900. So this include tax payment for the last year 500. So which means the tax paid for the first 3 quarters is 1,400. Okay. And tax provision for last quarter 200. So this amount you have to mention in the SFP current liabilities. And the correct tax for this year is 1,600. But you can't record this in the income statement because there is a adjustments that you have to do regarding the last year. So the last year tax provision given 600 and tax paid for the last year given 400. So which means you did an over provision in the last year 200, but you can't go back and correct that. So that over provision you have to deduct from the current year, right? So the tax expense that you have to mention in the income statement after adjusting that over provision is 1,400. Okay. And the next one, the financial statements of a company were authorized to issue by the directors on 31st May 2021. And the following events took place prior to this day. A trade debtor of a company was declared bankrupt on 1/5/2021. And trade receivables balance shown in the trial balance includes the 600 receivables from debtors. Yes, you can adjust that because this is a debtor that appeared for as at 31st March 2021 and this debtors bankrupt before authorizing the financial date. So you can adjust that. Bad debts debit, you have to mention this in the distribution expenses and that 600 you have to deduct from the trade receivables. And here the fire destroys are not adjusted, right? So yes, that's it for 2021 company account discussion. So do comments, do share with your friends, and please do comments if you know if you need any uh, if there are any suggestions, right? Okay, so we will meet from the 2022 A-level company account discussion. Until that, goodbye.